Okay, we'd like to welcome you all here this afternoon, and sorry for that little problem with the internet. Gotta love South Africa. It does have its challenges sometimes. Ladies and gentlemen, I'm sitting here with Grant Weyer, and we're very excited to bring you here today and to start discussing, Grant. I'd like to just understand from your perspective what has actually happened. For those of you who don't know, Grant is actually a South African. He's based out in Brisbane, but is over in South Africa. And we decided to have this webinar just as a frank and friendly conversation, to give you some information as to what's actually happening. So just to put it into context so that you all understand, for those of you that don't know, International Property Solutions, IPS, my company, has helped over 2,000 people invest in international property. But the one thing we found, particularly in the international market, and probably even more so in Australia than other markets, is that people weren't just interested in the property component. They were interested in many of the other parts to the transaction. They were looking at creating a plan B. The property was just a catalyst in terms of a far bigger picture plan that they were ultimately trying to achieve. And as you guys know, I do a lot of traveling. I was in Australia in May this year. We work with Ausinvest. Our partner is actually behind here on the screen. Now, Ausinvest is the leading property provider within Australia for investors who are looking to invest primarily in residential property. And they had also come across the same inherent problem, that it's not just about the property, and that is where they actually had met Grant and they had formed a partnership. And really, from my perspective, when I met Grant, the final piece of the puzzle was put into place, because ultimately what Grant provides is he helps people understand what their long-term aim is and then create a path in terms of actually providing that. But we'll get into some more details with regards to that. So, just before we get started, Grant, who is Grant Weyer? And, what is your background? Where do you come from, basically?
Scott, I started off studying law in South Africa. I fortunately left the legal profession after 2 years of articles, decided that law was not for me, and went into management consulting and then corporate finance. Have about 18 odd years experience in the field of corporate finance, have assisted in setting up a variety of different companies, trusts, offshore structures, and international transactions. So my background is really in the finance industry and in corporate finance in particular.
Okay. And I mean, pretty much 4.5 to 5 years ago, you immigrated from South Africa over to Australia. Tell us a little bit about that. You told me it's a bit of a challenging experience.
Yeah, it is. Like anything, any big change in life is something that's pretty challenging. I immigrated to Australia on the basis of a business owner visa, which back then was slightly different to how it is now. It was only a one-stage process, but you still then had to set up a business. You had to meet certain, at that stage, rather perfunctory requirements, and then your visa was effectively rubber stamped and became, and you were then granted permanent residency. Now that situation is quite different, and the challenges that business owner visas face is quite a big one. You're under a lot more pressure now. Your initial visa is only a provisional one. You have to then set up a business. You've got 4 years within which to do that. So from my personal perspective, I think I can be grateful that I wasn't under the pressure that a lot of business owner visas find themselves under now. And very often we do find that people start to make decisions based on their visa rather than their business. And that's really how Pacific Council came about, was through I suppose, the pain that I felt in the learning process, and taking good lessons from what I learned through that process to hopefully make it easier for other people embarking on the same journey.
So, I mean, just to conceptualize that, I mean, you mentioned a lot of pain. My uncle actually immigrated in 2003, and I've heard very similar stories from him and his peer group. Explain a little bit about that and where Pacific Council came about, and what it was actually trying to solve, what problem it was trying to solve.
Well, I think there's a few of the major things that I find clients underestimate is the power of the local network. Especially successful business people, once they've been here for a while, they tend to take the network almost for granted. And no, it's a powerful asset, but it's like so many things, it's only when it's not there that you actually realize how compelling and how powerful an advantage that is in the marketplace. So I think that's one of the major challenges that we see in clients that have moved over to Australia, the business that they have got themselves into there is not doing as well as they may have hoped. And often when we drill down and we look into that in more detail, we find out, well, they've underestimated the power of their home network and local knowledge. They haven't really taken the time and got the expertise to understand the playing field, to understand what the competitive environment there is like, who are their competitors, what is the market opportunity like, how's that market segmented, how have their competitors or prospective competitors behaved in the past when a new person has entered that market. All of those type of things, which comes under sort of the heading of market intelligence. We find that preparation is sometimes not done particularly well. And then the third part is perhaps an overestimation of how the skill sets that people have here will necessarily translate in the Australian market. The Australian market is a very competitive market. It is a fully developed market, and in most instances we find that opportunities open less frequently and the window of opportunity shuts very quickly because there's a lot of eyes and ears focused on those market opportunities. So I would say those are the three major issues that we often see, and that's why Pacific Council is there, to try and educate our clients, to try and assist them to overcome those issues.
Okay. I mean, look, something else that you've mentioned to me, and I just, you might have mentioned it, but I want to make it pretty obvious as well, is that a lot of guys go over on these business visas and, panic purchase, if that's the best way. They buy stuff because they have to within a certain time frame.
Yeah.
Just give us a little bit of detail on that, because, I mean, that also is a major problem. You've got guys that are in certain industries buying in completely different industries, and they're losing a lot of money, basically.
Absolutely, and that's also, it's that failure to integrate. So Pacific Council really gives our clients access to all of the professional services under one roof. So be it the analysts who can evaluate the market opportunity, the lawyers who can look into, and specialist lawyers in different areas, they can look into the commercial side of things, or otherwise into intellectual property, for instance, is another area. Then the accounting, the financial services, or the financial profession, for people to have a look at what the tax side, what are the tax consequences of coming into Australia, capital gains when you enter the new market, what are the value of your assets coming in, all of those things. So what we try and do is we integrate everything in that one network, and when we do that, we find that provides people with a far clearer route forward, as opposed to coming in and buying a business under the pressure of having to meet visa requirements. Our advice to clients is, if you wouldn't buy the business here, don't buy it there. And if you buy well, then you will almost automatically satisfy the requirements of a business owner visa. Again, there are categories, and it depends on the level at which the client is coming in. We do specialize in the higher net worth clients. Our clients ordinarily would be worth $10 million and above, and would be looking to create a reasonably substantial presence in Australia. On the smaller side of businesses, where you do find a lot of problems, is key man risk. So where clients will come in, they'll acquire a business, there may be a very loyal following of clients, but when that key person leaves the business, often the clients leave with them, or otherwise there's a significant drop-off in the revenue. So the structuring of the deal is very important there, to ensure that their interests are protected if they are doing a smaller transaction. And with those smaller transactions, we have, like John Griffith, we have specialists in those fields who assist our clients to really look after their interests as well. So those are some of the things that we've encountered.
Cool. I mean, look, I think something else that I've certainly learned from yourself is that what a lot of South Africans do, and it might even be English people or whatever, but anyone immigrating actually sells off shop completely here, gets on an airplane, flies over there, and as you say, is forced to buy this business within 2 to 4 years. And actually, the right way to do it is to be talking to you long before they're thinking of going. The whole thing is that it might not even be about immigration. It might be setting up a diversified company or plan. But I think the thing that I've learned that's so critical since meeting you is that that's part of strategic investment. And then also what I think again, that I've learned, which is very critical, is that you can also leverage off the assets you've got here versus starting from scratch. So what you tend to find from your words is that guys move over there, they've sold everything up here, and then it's very difficult to get started. Whereas if they get started from a strong base here, they can really get going, with a lot more momentum on that side.
Yeah, I think we would probably find that about 10% of our clients really come look at Australia with the absolute intention of immigrating there within sort of the next 2 to 3 years. For the vast majority of our clients, what they're looking to do is actually diversify. They're looking to get some form of international currency exposure, and really are concerned about having all their eggs in one basket. So they typically have been successful here, and are now looking to spread that base a little bit. And that's just simple, good economics. South Africa is a wonderful place to do business. The opportunities here are excellent. The opportunity for profit is probably better here than certainly most other areas in the world. And in my view, certainly easier to make money here than what it is in Australia, to make money in Australia. So a lot of the time, our clients focus their high risk, or where they're looking to make a higher return, and a higher return comes with a higher risk. They focus on their South African business, where they're looking to stabilize and perhaps get a lower return out of their operations. They will look to a market like Australia. We also are represented in San Francisco and in the UK as well. But an important element of that is that it's a systematic process. It's not a decision you make in a day, that you set the groundwork first. Through Pacific Council, we can assist our clients in even forming a virtual office. So the telephone is answered in their name, the name of their company. We can assist them to open doors, to even go and see potential clients on their behalf. If they employ 1 or 2 qualified or skilled staff members in their particular field of business, we can act as a quasi-board of directors. We can supervise those staff, we can look after the financial management, and then take those steps one by one. Find out whether it's feasible. Obviously, we do all of the due diligence, the financial feasibility analysis, all of that is done up front. The market intelligence is done up front, but there's no better way to do this than to actually get in there and do it. Well, there's no other way to do it than to actually test the market. So instead of a big bang approach, we advocate a more gradual approach. Get into the market, understand the dynamics, and then often by the time, if the client ever moves over there, by the time they do get there, at least the wheels are moving. The business is better understood, the business opportunity is better understood, and there's an existing there is an existing track record which makes financing and all of those elements much simpler.
Yep. No, perfect. And I mean, look, but certainly from an IPS perspective, as you all know, my passion is on the property side. And I mean, I think obviously Pacific Council is a lot more diverse and can offer many different opportunities. You've mentioned things from agriculture through to technology through to everything else. But, I also wanted to understand a little bit about from a property component, because, why is it that you've been looking at property, particularly in the context of South Africans?
Scott, property is an asset class that South Africans are particularly familiar with. And we also find that a lot of our clients have actually done very well in property. Even though they may have other businesses, they will have some form of involvement in either property development or residential, industrial property. Obviously, residential, I'm talking here about investment residential properties. So it's something that you can physically see, something you can touch. When you get rights to property in somewhere like Australia, it's very difficult for those rights to be eroded without your knowledge or participation in it. So it's viewed as a very solid asset, and it's something that South Africans are inherently comfortable with managing at a distance. Our role there can vary depending on the nature of property investment. We've worked together on some of these. Obviously, AusInvest has a particularly good product for South Africans wanting the house and land package.
Just a quick one while you're talking about that. I actually just want to go on to that and just show. I've got a slide here quickly there. So just while we're talking about it, that is actually a particular 4-bedroom, 2-bathroom home from AusInvest. It's actually a house that one of our clients has purchased in North Lakes, as an example.
Yeah, that's something that you guys have proven to be particularly proficient in getting clients into an investment of that nature, which I think together with what you offer and what AusInvest offers we had a look at the market very carefully, looked at a number of the role players in the market, and I talk about certainly north of 10, and in our own due diligence of the market, Ausinvest came out trumps. And in the Australian market, you'll very quickly hear the bad news if there's a property investment company that isn't doing the right thing by its clients. And you can search the internet. There's very little bad news about Ausinvest. So, and there's very little bad news about yourselves and how you've dealt with it. So for a lot of our clients, that particular asset or that particular investment is a very good one. But what we found, and what we found together with you, is that that only solves a portion of, or satisfies a portion of the client's needs. What the client really wants is for you to almost illuminate the path ahead for them. So we start here, and the investment property may form the first part of it, and then we go from that point on, and we create a greater presence in the country through a number of different strategies. But that is I suppose the best. The best strategy is to do that on a gradual and systematic process, and that will inevitably generate better results for the client than a piecemeal sort of view. I'll just invest a little bit here and a little bit there. If we coordinate all of that with our partners like yourselves, it normally ends up being a very productive process for the client.
And look, so certainly some of the clients that come to us want different things, but aside from an investment property, if you want to call it that, some of them are particular developers and want to climb up the value chain and get their hands dirty and actually get involved in development. Others are more commercially aligned. Just explain to me a little bit about why, again, property could be one of the better businesses due to the lower barriers to entry in comparison with getting in one of those $10 million plus businesses that you've been speaking about.
Well, property from that point of view, together with Ausinvest and part of the Ausinvest group, which is Dodmark, who are property developers themselves, we've developed a very bespoke solution for South African clients who want to actually get actively involved in the business of property development. And if done correctly, it has the potential to also satisfy some visa requirements, so when it's not a passive investment. So they have a history of some property development here. That can assist them to externalize capital on the basis of setting up an offshore business using foreign direct investment approval. There is the potential for that. It's not always, it's often easier said than done, but there is the potential for that depending on the client's individual circumstances. And then once that capital is actually positioned in Australia, we assist the client in entering into that transaction at a very early level. So identify either distressed land that is already development approved, or otherwise land that is not quite development approved, but it has been progressed in that along that path. And those developments will only take place in areas where Ausinvest has the sales solution. So it's not a build it and they will come approach. We're very sure that the property can be sold and backed up with the Ausinvest lease pay. So in effect, what you're doing is you're getting involved in the development process of the stock that you're selling to your clients, in the example that you had up on the screen. And those developments are done in a way where they are shepherded through the process. We retain oversight. There is an involvement from our clients in the development process, but they also partner with trusted developers with a track record like Dodmark in Australia, and have the comfort of dealing with a reputable company like IPS, or companies like IPS here and Ausinvest over there. And that, together with Pacific Council, being able to enable that whole process and provide all of the advice and backup through that entire transaction life cycle, is where I think we are, well, where I know we are completely different from anything else that's on offer in the market.
No, look, 100%, and I think the great thing there really from a client's perspective is that, as you said, it's an end-to-end solution where their hand is held right through the process. And 5 years from now, you've got a profitable business in Australia that has assets, both foreign assets and foreign income. Whether you want to move or not is your decision, but you've got the best of both worlds in terms of having that peace of mind. You speak a lot about the peace of mind, but it's not necessarily whether you want to immigrate, but just knowing that you've got that plan B.
Scott, South Africa is still one of the best countries in the world to live, and there's no question about that. And I think we are really in that game. We're in the game of selling peace of mind. So by giving our clients the alternative, by giving them the peace of mind that they know that they do have a strategy, that they don't have all of their eggs in one basket, that they do have a strategy that that if they were so inclined, they could move out and be productive in another country. That really starts to provide the benefits from day one, because you find that people then remain more focused on what they're doing here. They're not too concerned about the stuff that would normally really bother them, because they know they have got alternatives. And that's not peculiar to South Africa, whether it's China, whether it's any emerging market. Those considerations and the challenges that one faces in an emerging market are similar across all of the emerging markets. So emerging markets come with more risk, but they come with more opportunity for profit. And all we are is probably 1 foot outside as a little stabilizer. And that stability gives people a huge amount of peace of mind.
Yeah. Tell us a little bit, we've spoken about both the residential opportunities, we've spoken about the residential development opportunities. Tell us just a little bit about the commercial side. It's obviously quite a big want and need from a South African perspective on the commercial side.
Well, the residential side, why we favour the residential side, and we do understand for a lot of our clients here, residential property development is really not where the game has been played. A lot of it has been played on the commercial side. But residential has such compelling and fundamental supply and demand dynamics that we feel that that's actually where the lower risk opportunities lie in the Australian market. But some of our clients are looking for the higher yields and are prepared to take a higher risk. And in that sense, there are opportunities in Australia, and we have an extensive network of private bankers, of lawyers, of accountants, people like that, who provide us with opportunities that we term are off-market. So it's before they actually get publicly released. And many of those are distressed opportunities. So many of those may be where the client is, where the vendor of those properties is under financial stress. They need a quick solution, and they often want to do it cleanly and quietly. In the commercial property arena, that's something that we would typically deal with. And we would evaluate that, we'd do the due diligence, we'd understand exactly what the dynamics of that are, whether there is the potential, and we would only advise our clients to get involved in the transaction where there is the potential for a reasonably quick improvement in the value of that by strata titling or doing something of that nature. And then selling down typically a portion of that development and reducing the senior debt to a level where it's positively, where the cash flows are positive, and that forms the foundation of the operations in Australia. And like with anywhere in the world, a track record is so important. In Australia, maybe even more than most markets, the banks are relatively conservative. So having a track record, having an asset there that the bank can look to for comfort is a hugely important thing.
Yeah. I mean, just as an example, and we can't go into too much details because we've got specific clients looking at that, but I mean, as an example of what Grant's talking about, there's an opportunity in Brisbane with blue chip tenants. It's 10 industrial buildings basically. The guys got into trouble. You're looking at a discount or off market value of about 33%, a third of the value. Sorry, you're buying it at 2/3 of the value. Yeah. And the opportunity there really is that you could sell off 5 of the 10 buildings. You could sectional title them or strata them and sell off 5 of them and retain the other 5, pay off the senior debt, and have a building, on a net yield of 9% plus minus, and it really gives a great foothold to get started in the Aussie market. Basically.
Absolutely, it's a pretty simple equation. I mean, this is something that, case in point, was 27 million to develop, 3 million in the land. It's not yet strata title, which is sectional title effectively. And if these are just industrial units, industrial with office space, very much like what we're familiar with here. And if that's carved up, or when that's carved up, they would be able to be sold off at varying prices each. And that ends up being a really compelling proposition for our clients, because there is both that initial increase in the value through doing something special, well, not particularly special. I mean, we really don't focus on any tricky stuff. It's really good, simple stuff. Yeah. But there's a value accrual there for the client, and it leaves them in a situation where they've got a great yield. That's yielding 9%. Depending on the balance sheet of the client and how strong the client is financially and what other assets they have in Australia, you could be looking at financing of anywhere between 6.5% and 7.5% with a yield of 9%.
Yeah. No, look, it's a substantial offering, so I just wanted to try and give people the concept that there's different solutions. But I think the most important thing that I want to get across is that from Grant's perspective, it doesn't start with a building and we're trying to sell it to you. It starts with understanding what you're trying to achieve and then working our way backwards.
I think that's the important thing, Scott, is we're in the game of bespoke solutions for clients. We're not in the game of selling property. Property forms one integral component in many instances of an overall solution that we provide the client with. So we are not in the game of saying, we're not estate agents, so we don't go out there and say, and have a pool of clients and flick around various opportunities. What we do is we engage with our clients, we find out what their needs are, and then we design that solution and property that we will then go out and search for the right type of property that fits those needs. And we'll work with guys like IPS and your relationship with Ausinvest for a whole range of solutions on the residential side as well. So, and then there's also obviously what we've been working on is the fund structure, which I think is something that you are best positioned to.
Yeah, I mean, I think just from that perspective, and it's pretty much my final question was that Grant, you've alluded to it already. You pretty much deal with clients $10 million and above, 70 million rand. That's substantial high net worth individuals. What we are working towards, and it's not quite on the table yet, but is a solution for sort of the average investor who's got sort of 100, 200, 300,000 rand, because they've also got the same concerns and the same worries and the same needs. And I know that obviously we're working with you on that. I don't want to give too many details now, but I just wanted to put it out there that it is a solution. We do understand that those type of individuals and investors have the same concerns, and we do and are building solutions for them, basically.
Yeah, so, absolutely. That's a very important part of it, because sort of to use sort of the finance language, or finance language, which can be irritating, but we see our high net worth investors often as the seed stage investors. They put in that initial capital that unlocks the opportunity, but then there's obviously the development phase. There's money that's required to bring that opportunity to realization, and that's where the fund comes into it, where we can actually use that as one mechanism for providing South Africans who don't have the $10 million and the capability to do it at that level, to actually still have a strategy where they can work towards financial independence through yourself, guiding them through that process, showing them, well, if you invest 200,000 Rand now, 200,000 next year, and you work through a process over a period of time, you will have enough capital there to be able, using the fund as your vehicle to invest in, you will have enough capital there to acquire a standalone house and land package, and you can work a variety of solutions around that to give everybody, in essence, the peace of mind of actually being able to diversify and have something outside of the emerging market of South Africa.
Look, something very interesting, and I just want to go back to the PowerPoint. I did a little study a couple of weeks ago, actually, and I was just trying to a lot of people talk about currency and what's actually happening from a currency perspective. Now, neither you or I are going to sit here and try and profess to be currency experts. I tend to say if I'm buying, sell, and if I'm selling, buy when it comes to currency. But there's quite a lot of research, and this year is a group that's been going for over 10 years. They've got basically got it right in more than 80% of the occasion. And this is the rand to the US dollar, but I think very interestingly enough, their forecast over the next 5 years is not whether it's going to go up or down, it's just how much the rand is going to devalue against the US dollar, anywhere in the region of 11 rand to the US dollar to 22 rand to the US dollar. Now, what I basically looked at, and I mean, I know the purpose of today was not to have a debate about the rand and what's happening, but certainly with what's happening with COSATU, the comments with regards to Zuma on the OECD, etc. Common sense tells you that there's certainly political pressure and what's happening in terms of that. Now, people say to me, well, what does that actually mean? And what I did is I got the ABSA housing index, and I compared it with the average South African house price and the average Australian house price. And I just thought to myself, well, where would I have been 30 years ago, 32 years ago to be exact, if I'd bought the exact same assets over those times, and what would have happened? And you can actually see here the graph pretty much explains itself, but the red line is the South African property investment, and the blue line is the Australian property investment. And it just puts into context the whole comparing apples with apples. You know, if I've got R1 million or less or more, and I invest here in South Africa versus if I invest overseas, and what the long-term effects would be. A lot of people also talk, that's with regards to capital growth. A lot of people also talk purely, sophisticated property investors tend to focus on yield and income. And quite interesting enough, I did the same thing over the last 30 years, and you can see the blue line there in terms of the South African rentals and the South African yields, and in comparison with the Australian one. So you can see there's quite a bespoke difference between whether you invested in South Africa and whether you invest in Australia. And interestingly enough, I've got all this research, both 30 years, 20 years, and the last 10 years. And they're telling a similar story. But I think the most important thing is that we're not focusing on short term. You know, if you're looking to invest overseas, you've got to have a medium to long term aim, basically.
Yeah, absolutely. I mean, I couldn't agree more. Look, the rand is the great unknown, and we would never be so bold as to start to predict what will happen to any currency. It's not our field of expertise. But I think most people that you talk to would agree that the likelihood or the propensity for the rand to weaken is probably stronger than for the rand to strengthen. And then there's all the unknowns of hedge funds and another event of George Soros and their crew in hedge funds shorting the particular currency and all that. But it's not an area of our particular expertise. But I think long term, it is a concern, and for so long as that is a concern of our clients, then what actually happens is to a large degree not critical. If they do externalize their capital on the basis that fundamentally the investment they're making is a good one. Currency is a benefit that will either materialize or not materialize. But so long as the investment itself is solid, and the major underlying principle is diversification. Diversification is the simplest way to manage risk. And if you work with just those two, that the investment itself is fundamentally sound, and that diversification is a good thing to do, the currency stuff will look after itself. If you do get it, it's great, it's a windfall, but if it concerns you, then it can be a motivating factor to making the investment. But it shouldn't be a pivotal decision making component of it.
No, very much so. It interests me as an investor. I don't like to have all my eggs in the South African basket, and I like to look at long-term trends because it's, you know,
absolutely.
I mean, Robert Kiyosaki, the guy that wrote Rich Dad Poor Dad, something he said that I found fascinating. He said the easiest way to make money is follow long-term trends.
Yep.
And, you know, at the end of the day, you can look at the long-term trends and see what is actually and ultimately happening.
Absolutely. And in your graphs there, what's very clear to see as well is that supply and demand imbalance. And really a lot of that in the Australian market that has driven both the yields and the increase in the property prices is not only a currency issue, it's probably more so the issue of net migration coming into Australia, that there's, I think it was last year, something like 400,000, you'll probably know the numbers better than I, of people migrating into Australia, and the red tape involved in Australia in the release of development land. It takes an inordinate amount of time to get a piece of land rezoned and through all of those processes. And because it's done on a local government or on a state-by-state basis, there are disparate rules and regulations in each different state, which makes for a very cumbersome process. And that's where the shortage of supply comes in. The banks have very difficult funding criteria. All of that is what conspires together to drive that supply and demand up and to drive the supply and demand imbalance, and that's what contributes to those increases in property prices that you saw in the graphs.
I mean, I think for some of you that have seen the presentations before, Grant's alluded to it. There's only two ways to get into Australia. You either got skills or you got money. So inherently the economy just gets stronger and stronger with the type of people coming into the country. Last year it was the only economy not to go into recession out of the top G20 countries all over the world, so the most powerful 20 countries. And the Australian property market actually last year grew by 8.6% positive, when pretty much almost every other market either went sideways or backwards. So just backing up what you're saying and the long-term statistics. And the other thing that I think is fundamentally important for Australia is that it went into the global crisis with a large surplus in its bank account. And granted, it's spent it. It's given away Christmas presents at $1,000 or whatever it was for every citizen. But at the end of the day, it's not in the situation where England or America is with these huge debts and burdens that it's got. So I think those things fundamentally are really important. From an investment perspective, long term as well.
Yeah, you only have to have a look at some of the research coming out of the big mortgage lenders, ANZ for instance, which backs up everything you've been saying. It's always good to hear it from the people who are lending money into that market. But it's known as the Goldilocks economy. It is an economy that's been very well managed. It's an economy that has a very high degree of financial literacy, and that's because superannuation, almost anybody who's working in the population has some involvement through their superannuation, which is effectively like a pension fund, in the markets, and they follow it. They tend to follow it very closely. So when there are movements in fiscal policy, and when the government does increase interest rates, etc., the economy generally is able to translate those movements very quickly, or those behaviors of the central bank, for instance, and to actually react to those movements. We've had 6 interest rate hikes over the last while, and there are 25 basis points, so 0.25%. And that has had they felt that the market was probably a bit too buoyant, and that has actually had a massive effect on the Australian market over the last while, in actually just in quelling that level of demand and getting inflation under control. So it's a very reactive economy, and I think that's what we saw during the financial crisis, and probably that's the stability and that first world economy, that safety blanket, I think, that a lot of South African investors find some comfort in.
Grant, you talk about the reports. I'm just going to go quickly to the PowerPoint slide there. Between yourself and Richard Dunn from Ozinvest, I get a lot of reports sent to me. I get a lot myself. So I just wanted to, for all of you that are on the webinar, I just want to let you know that those market reports, if you want to email through to me, and I'll send you my email now, I can send them to you. We also got them up on our blog, which you can see there. Not the latest ones, Grant, the ones Grant's talking about now from ANZ and stuff, I need to actually put up there. I can send you some information on RAND forecasts if you're interested. There's a document I put together about 2 months ago, actually, when I was in Australia, on the 5 critical things you need to know before you invest offshore. Whether you invest offshore through myself, Pacific Council, Ozinvest, is actually immaterial. But you need to know those 5 things before you invest offshore, because more than 80% of South Africans that invest offshore actually lose money. And you need to know why they do and how you can avoid it. And then also, if you're interested in some of the opportunities, tonight and today was not about opportunities, it was about understanding the process and how we can actually go through it. But certainly you can contact us and let us know. You've got our website there, ipsinvest.com, the telephone number, the free number 0800 offshore, or our Joburg number 011-463-0588. As I said to you, the blog is there. Twitter, a lot of people in South Africa haven't quite understood Twitter yet, but there is huge value in it, and when things change and when they send me market reports and I put them on the blog, I can put them up. And then also with regards to video, we do make videos. I'm actually flying to Australia next Tuesday, and we'll again be updating you on what I found within the market. So that's really all from our side. I'm not sure, Grant, if there's anything you want to add. But for all the people that are online, please give us some questions. Is there anything else that you would like to know from us? Anything that we can help with while we're here? I know these webinars are still something quite new to people, so if you look at the right-hand side of your screens up to, that side of your screen, you can actually just type through questions for us. One of the gentlemen sent through a question earlier on, Justin, asking, will this be recorded? We have actually recorded it, and we will be making it available to download just so that people have access to it.
Also, our website is also a source of information as well.
Yeah, if you want to.
And that's www.pacific-council.com, and you'll find quite a bit of information there of what we've discussed today and what Pacific Council can do.
.com or .com.au.
.com.
Cool. I've just sent that link through to all of you so that you've got it. You can literally click on it and go straight through. There's a quick question here from Stephen. He said, Grant, if things are so good in Australia, why are you and Ozinvest coming out to South Africa as a matter of interest, in terms of what's happening?
Well, it is that calling about diversification. It's not a matter of saying one is better than the next. One is clearly an emerging market, and the opportunities here are great, and the other one is a developed market. And I think what it is important to understand is the benefits of diversification. When we see clients and they say, but I can make such a better return in South Africa, well, there's a fundamental reason for that, and that's not our view of the world. It's a fundamental reason that is common to all emerging markets, and that is that capital is rewarded for taking risk. And in an emerging market where there are higher risks, there is the potential for a higher return. Now, in the Australian market, it's far more difficult to actually make the type of returns here. And that's why I believe, being a South African, is that this is still the best place to make money in the world. And it still is our home market. And that's where we compete best, is in our home market. But for those people wanting the feeling and the security of some diversification, well, we are that vehicle that can provide them with that diversification. Working with yourselves and the funds and all that stuff we're setting up, we're not doing anything here that is particularly new. I mean, these are fundamental principles of economics. Diversification is a great way to manage risk. Make your money in the market you understand, and have some security in another market which is lower risk but will be lower return.
And I think just to add to that as well, Ozinvest are doing tremendously well in Australia, and it was actually, from an IPS perspective, it was actually us that went to them and brought them to South Africa, because we had inherently a lot of clients wanting to invest in Australia. And so it's not a case of they can't sell it in Australia to Australians. They are doing great guns in Australia, selling the product to Australians in Australia, and all we're doing is helping and facilitate South Africans to have the same opportunity. So,
I think you did right there. I'm not sure about the percentage of sales, but I would think it's probably somewhere between 5 and south of 10% of Ozinvest's total sales come from outside of Australia. So 90% plus would be from sales generated in Australia. And of that, I understand somewhere between 50 and 60% are actually return clients.
Yeah, no, 100%. And to be honest, it's awesome working with them, because we're having the same thing now. Yeah. Our clients, we've been in Australia for 2.5 years. It's a high percentage. 30-40% of our sales now are actually from past clients already that have been through the process.
And that's the critical part for us, is that we're not in the game of selling property. So what we don't want to do is put our clients into an investment that gives us a headache. So it's got to be something that's nice and simple, something that is stable, something that is solid, doesn't provide exceptional returns, but it does provide the safety of a market that is underpinned by good fundamentals of supply and demand, and a perceived, whether that's true anymore or not with what we know about Spain, etc., a perceived safer economy by world standards. And I'm not talking about South Africa now. Australia is perceived as a safer economy to invest in by the Standards and Poor's and the Moody's of the world than what any emerging market is.
Just we've got a couple of questions here. Mandy said, what is the minimum investment entry-level house, assuming we tick all the boxes to buy a house through Ozinvest? Mandy, it's very much dependent on which area you look at. We are looking at bringing some more affordable products. We're actually launching something tomorrow night in the region of about $330,000, which is a 3-bedroom, 2-bathroom townhouse. And you're needing in the region of around 800,000 Rand, all-inclusive. So that's your deposit, your costs, to set it up, etc., to actually buy the property. But that is one of the reasons that Grant and myself and Richard have been working with regards to the fund to be able to bring it in and provide a product for a more affordable, someone who's got 100 or 200,000 rand as a product. But at the moment, as we stand, to buy an individual property, you'd be looking at about 8 to 900,000 rand, basically. Lawrence has said to me, how does RPS make money? I bought some property option for RPS, and RPS was not involved. Lawrence, basically, we partner completely with Ozinvest. We're a 50-50 partner with them. I set up RPS 7 years ago, and I set up an office in London, Dubai, and 3 in South Africa. And I learned quite quickly to have an infrastructure in all these different places is very difficult, very expensive, and most important, very timely to actually run. So my logic when we went to Australia was to go and find the best partner, best of breed partner on the ground there, and to partner with them. We share the commission that we earn 50-50, but they equally are lucky to have us on the South African side to be, and the London side to be able to provide that solution to the client. So it doesn't cost any extra money for you. We basically, we split it 50-50 with them. And the nice thing is that Australia is very, very regulated. So there's none of this, the property's worth 100 and you get sold it for 110. The price is the price. It doesn't matter whether you're buying, if you're an Australian buying in Australia, or if you're buying from overseas. In fact, you can actually go to jail for putting margins on prices, etc., etc.
And ultimately, the price is set by the market. It's a very efficient market. If you overprice your stock, it simply won't sell.
Correct. Yeah. Kanya asked you, since Australia limits foreigners to buying newly built property to drive the construction sector, do you think SA should do the same? Kanya, interesting question. Getting involved in politics and property in South Africa is probably not the forum for it, but it does make sense to me. I think the overriding thing, and I've been doing presentations in London for over 7 years, selling and promoting South African. I'm one of the most passionate South Africans you'll meet. The problem we got in South Africa is they just need to make up their mind and do something. Because while they talk about it, it creates a lot of inconsistencies and uncertainty, and that's the problem. Australia has a rule that everyone knows how it works, and then foreigners have no problem investing in property. What happens in South Africa is it creates uncertainty with where we are. So I wish they would just make a rule, and if it wasn't they could only buy a new build, fantastic. It would drive our construction sector. I think it makes a lot of merit, personally. But I'm not going to get involved in South African politics. The one thing that I don't want them to do is limit foreign ownership completely, because I think that gets perceived completely the wrong way, and it will affect foreign direct investment in this country across all sectors, not just property. And then lastly, Justin says, doesn't think the link worked. Justin, fair enough. Let me make sure that I got it right here. Pacific-council.com.
Council with an S, sorry.
Sorry, guys. Just 2 seconds there. Pacific Council.
C-O-U-N.
C-O-U-N.
C-O-U-N-S-E-L.
Sorry. Okay, cool. There we are, Justin. That'll work for you, basically. And just so that you guys have, this is my my email. If you want to send me through any comments, we'll be able to. Sorry, that doesn't come through as an @ but it's supposed to be scott@ipsinvest.com. I can send you those market reports. So, ladies and gentlemen, I tried to keep these certainly within the hour. I don't see any more questions coming through. There's some great questions there, and thanks very much to everyone for participating. If there's anything else, please send them through now. Otherwise, I'm going to thank Grant very much for your time.
Thank you.
It's awesome to have you back in the country. I'm sure you've enjoyed a couple of days and certainly seeing the family.
Always good to be back.
So it's great. And yes, certainly for all of you out there, it's great to have you online. If you've got any comments, we're always looking to improve. I certainly know the technology in this country with broadband, etc., is still a bit of a challenge, but it's really great to get the insights from guys that have not only been there and done that, but also to communicate what's happening, and then really to be able to come here and to give us opportunities. And I'm going to finish off, and I'm stealing it directly from Grant. But at the end of the day, there is that pain and there is that concern for certain people, and really it is about finding the solutions and looking for what I think is most important is not trying to put people in boxes, but understanding what their concerns are and then providing them with a solution. So. From us here, thank you very much, Grant. I don't know if there's anything from your side, but to all of you online, thank you very much, and good night, and we look forward to seeing you in the future. Cheers.